What's up, guys? I welcome you in this wonderful video. There's something I want to share with you today, when it comes to trading. I know a lot of us as traders, we believe that being successful in trading or being profitable in trading, it's all about understanding how to analyze, how to draw trend lines, how to see patterns, and how to actually get good confirmation and so on. Although that is somehow a truthful thing, but what you need to know is that it's not the main thing that will make you successful as a trader. It's not the main thing that will make you successful as a trader, because usually when we analyze as traders, let's say you're gonna analyze this kind of a move and you see that okay, there's an upward channel going up. Let's say you put all your trend lines in place and you identify, then you wait for a breakout, and let's say a breakout comes here, and you can see that it is initiated by a very huge candle, which indicates some kind of trust towards the sellers, which means that okay, we can trust them because in the breakout area, the breakout happened or it was initiated by a very huge candle, indicating huge momentum or greater strength. And then you begin to sell here. As you begin to sell, you will note that as price proceeds to go down, it doesn't go down long. Let's say it starts to go up, and when it starts to go up, then traders will begin to panic. They will do what? They will close, or others will wait, and then as it goes up, they will start to look at this as a buy and they will start to buy. Meaning, at the first place, their initial decision of selling here, it wasn't genuine. It wasn't genuine. They were just taking chances, not just taking chances from something that they haven't seen. They were taking chances from something that they've seen, unfortunately something that has already happened. Meaning this huge red candle, it caught their attention and they were expecting to see some kind of a next downward move continuing. So meaning as traders, we don't actually initiate or we don't actually trade a move which is about to happen, but we trade a move which has already happened, which is something that is wrong. So what you need to know is that price action, it should assist you to look for opportunities that are about to happen, not to look for opportunities that have already happened. Because if you're going to trade for things that have already happened, you will always be entering your trades, and then your trades will be going against you'll be buying and then the market will go against you. You'll be selling, the market will go against you. Why? Because you are already trading what has happened. So what is the key to then trading something that hasn't happened yet? So it takes a lot of filtering. Now, for an example, in this case, let me just erase and bring back my trend line here. So for an example, in this case, one can ask, how will I know if I have to sell here or sell wherever or sell up there? The right answer is that okay, you'll never know that you have to sell here unless maybe you look at the price going back, that okay, here we had a very interesting move. And for you to sell here, not everyone can sell here. Not anyone can execute a sell here. For you to sell here, it has to be a matter of being bold. What do I mean about being bold? It is having a mentality of someone, of an anticipator, someone who begins things, not someone who participates on things which have already happened. And this is risky, guys. Although I'm speaking about it, but trying to sell here is the most riskiest thing that you can do. However, the right way is to make sure that you wait for this upward move to be broken. That's the right way of taking chances. For an example, if you see, I will not go, or maybe let me go so that you can have clarity. Let me go to a lower time frame. So as you can see here, this upward move, it moved in some kind of a channel going up here. If I can put it even above, you can see how it was behaving, going all the way up. So your role as a trader, it is to analyze how this wave behaved, and then from a breakout of this wave, you can take chances. Why are you taking chances here? It is because you know that even if the market will go up, will go down and bounce in this trend line, you will know that okay, I've already gained something, although it was a risky move. So this is the only place where you are allowed to trade against the trend. Why? Because you are taking advantage of a territory or of a very, very significant level, in this case, which is resistance level. So you're trying to take advantage of this level, and you are also taking advantage of a corrective that is guaranteed to come. A corrective is guaranteed to come. And when you're entering here as a trader, you're expecting two things. You're either expecting price to bounce here, or price to break down and go on the downside, responding to this area. So you know that when price approaches this level, you expect a breakout or a continuation, and then a breakout is gonna come exactly as it came here. Price have to break this downward flow going up, and then you're gonna close your selling trades. Although you've benefited little amount, but it's better than nothing. And you demonstrated the ability to anticipate moves, because usually big moves, guys, they happen from resistance and supports. That's where big move happen, and trends are just found in between those areas. For an example, in this case, you can see it's a support, price bounced and it went all the way up as some kind of a trend. Other people will start buying all the way up there, but other people started buying here, and those people who started buying here, they took a risk to say, okay, I'm going to trust this support level and I'm going to wait for the flow to be broken, and then I'm going to take chances as a buy. And those people who took the chances here as a buy, it is the people who made most of the money, and there's the people who started to exit their trade somewhere all the way up there when prices started to break their trend line going down. So what I'm trying to say is that when you're analyzing with price action, you should make sure that price action your price action doesn't tell you to do things that have already happened, but it should tell you to do things that are about to happen, and it should be bold enough, be confident enough to make the decisions or to anticipate the market moves before anyone can see them. That's the way of to make money, because when everything is clearly visible, you need to know that, okay, it's a bit late. So make sure that you see those moves before they are clear, before it's too late. Let me put it in that way, and then you can take your trades from there. And what I can say is that you need to know that sometimes you'll try to sell here and the price won't work. But what is the joy of this? The joy of this is that usually when you enter your market as early as possible, the joy is that your risk becomes so narrow. Because if you're gonna enter here as a sell, you need to know that the stop loss is going to be up there, and when the market doesn't go on a favor, you lose not that much. But when you begin to sell here, you don't know where to actually put your stop loss. You're going to put it up there, or you're going to put it here, or you're going to put it all the way up there. But here it's some kind of a reasonable level to put your stop loss. Why? Because it's above the most recent high, not just the most recent high, but also the most recent key level. So it's unlikely that price is gonna push all the way up. If it pushes all the way up, you know that it's the beginning of a new it's a continuation of this trend, and it's a new territory that has been established. I hope that is making sense. So that's what I want to share, guys. Thank you for watching.